For more on that, let's bring in Morgan Stanley's Eric Woodring, the analyst there who so closely follows this company. It's great to have you on a day like this. How much worse was this than you anticipated?
Thank you for having me, Scott. It was worse than we expected, of course. Really, when you look at the incremental reciprocal tariff coming from China or applied to Chinese exports, when you look at the reciprocal tariff to markets like India or Vietnam or Thailand, where Apple has diversified their supply chain to, there really is nowhere to escape. Effectively 100% of Apple's products sold in the U.S. will be tariffed at a pretty exorbitant rate right now. So that was not my base case. I'm not sure that was my bear case either, but here we are. So we're seeing the stock react in real time to it.
But I mean, if it's worse than what your bear case even imagined it could be, what does this now mean for the estimates that you try and put on this company and for our viewers and the stock that they love to own, the share price?
Sure. So I think there's a near term and a longer term vision here, right? This tariff dynamic is not necessarily related to the product, the innovation, the services longer term. Could it impact it? Sure. But what we're talking about is somewhat the uncertainty, at least somewhat similar to March of 2020, where sure, there's a first order effect of there are tariffs imposed on your goods imported to the U.S. What do you do about that? I'm almost more worried about the second order effect, which is you almost certainly have to raise your prices. Good old supply demand tells us when you're raising your prices, your units, your volume is going to be lower. How much of an impact is that going to have? We just don't necessarily know. There's a lot of unknowns right now. So, this is a time where we as analysts try to do our best to make predictions about whether it's volumes or pricing or margins. But at the end of the day, I think there has to be even for a company like Apple, a pretty significant cut simply because the great unknown still does exist. When you look at the way that stocks are moving today, and you think about even as us as consumers, if my iPhone, if my MacBook, or any other product is 15, 20% more expensive, am I really going to buy it, or am I going to wait and determine maybe there is some relief in the future? You just don't know. That is ultimately the most challenging part of this job right now.
I mean, we've been having this conversation about the sluggishness of iPhone sales at, I'm pulling a number out of a hat, at $1,000. Now you're going to tell me it's going to cost $1,500 and all of a sudden you're going to get a flood of buying?
Oh, no, that's not what I'm saying. But
no, I know. I know you're not saying that. I know you're not saying that, but I'm saying in the the zeitgeist is like, okay, I wasn't really going to buy it at $1,000, but you jacked the price up now to $1,500. I'll buy it now.
Yeah, no, exactly the opposite. In fact, although I would say we do believe that to offset the price or the cost of these tariffs in the U.S., Apple would have to raise prices kind of across the board by call it 17, 18%. And the one good thing about when we think about buying our iPhone is that most of us actually around the world still do buy on an installment plan. So yes, at first we'd say $1,000 phone goes to $1,200. Definitely an impacted demand. I'm not denying that. But maybe the silver lining is, at least for a company like Apple, where there is some insulation from these challenges, is amortize that over 2 or 3 years, and maybe your $42 a month goes to $46, $48, $50. You're not necessarily quote unquote breaking the bank mentally as much as opposed to if you're buying something outright for $1,000, $2,000. Obviously, that is much more painful to your wallet.
I mean, bigger picture, the other topic we've talked so much about is Apple's China problem. Yeah. And this only accentuates a problem that has existed there, and it just creates more fog of when they can extract themselves from the issues that have existed there.
It does. So the way I think about it, at least, is on one end, Apple is the largest Western employer in China. We think they have something like 7 million either direct or indirect employees in China. So they're big in the scheme of things. But what theoretically would happen if China came back and said, you can still build your iPhones here. You just can't sell them here, right? But I don't know if that happens, but you have to think kind of worst case scenario in this type of environment. That's 35 million iPhones shipped annually at an ASP of $1,000, right? That's $30 to $35 billion that can effectively evaporate. Again, I'm not saying that is what is going to happen, but in this type of environment, think worst case scenario. It seems like each side is really, in this geopolitical situation, is kind of digging in. So again, real challenge on their hands.